What's up? Welcome back to Modern Traders. I'm Ben. And before we get started, I want to invite you over to the Discord, ModernTradersLLC.com, and the Instagram, Modern Traders LLC on Insta. And I want to talk a little bit today about an old saying they have. It goes, "Sell in May, go away." And that just means that we typically see a run up in the month of April and then a flat, somewhat a pullback into May. But I have a saying of my own that goes, buy in June, profit soon. Just meaning we're looking for companies that have a good chance of profit in the near future that are at a good buying point now in the month of May going into summer. And on that note, Sensionics is one of my favorites that's only down in the almost $2 flat range right now and has a big catalyst cycle coming up ahead of it. Now, essentially, Sensionics, it's a company that makes a glucose monitoring system that actually gets implanted under the skin for constant glucose monitoring. And they have a whole string of catalysts coming up involving FDA approvals for different lengths. Right now, their monitoring system is a 90-day system, and then needs to be replaced. They have a patent coming up for a 180-day and an approval for a 360. And taking a look at it, you can just see it's a small, compact system. It's a little transmitter. It fits in your pocket, vibrates to alert you, and implant under your skin. Tiny little thing. I think it says 3.5 millimeters that gets implanted. It goes to this transmitter, and then it's also got a mobile app that goes on your phone so that you're able to have a constant glucose monitoring without having to prick yourself and bleed and monitor the blood, which I'm sure aggravates diabetics everywhere. But looking at it, you can see it's just this little compact system. It's 100 right now. It says 90 days and it has to be replaced with the 180-day system. Obviously be more popular as this catches on. I think it'll become the norm, and this company will just continue to grow and grow. But looking here, you can see it laid out that in this article from Investors Place, essentially that over the past month we've seen census dropped heavy 50% tumble. It makes people think there's a problem with the company. However, there's not. The company now has 187 million in cash on its sheets, which is up from 18 million at the end of 2020. Basically, at the end of the day, this indicates the company has enough money to carry itself for the next couple of years, and that'll be plenty of time for these FDA approvals to come in. And taking a look at the graph, you can see that the on the day they're down a little bit, about 7%, right at that $2 level, and we have seen them hold that $2 range after coming up a little bit in the last few days. The last few trading days, it's been up from the $1.70, $1.80. Once it broke above 2, it does seem to be a pretty stable support for it. And I do expect to see it, if it does hold the $2 range, I do expect to see it run up pretty quickly, relatively. And then when we do see any of these catalysts drop, the FDA approvals, the moving into European markets, there are deals in the Swiss. These type of catalysts will definitely see this pop pretty quickly. I mean, looking back at the year-to-date graph, you can see it started the year right about 90 cents and then ran quickly up to almost 5.50 in late February before markets pulling back in general. But this one I do expect to see run, pretty quickly on every catalyst coming up in the next couple of years. And at the $2 support level, this is a great buy for me right now. I'm definitely going to be loading up on leap contracts. But till next time, I'm Ben. It's Modern Traders. Thanks for stopping by.